Good morning, ladies and gentlemen. Here from traders from Admiral Markets, we say welcome to our real-time daily trading idea webinar. In this webinar, we would like to screen the markets, show you some interesting trading setups, and discussing here the topics of today on the markets. But first of all, here is our risk disclaimer. So please be aware that all we are showing and presenting here is just a personal opinion of our trader and not an advice for investing. Please be also aware that all Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So they maybe not be subtitled for everyone. So yeah, please be aware of this risk here and check our website for more details. So here we have a quick overview about the ESMA regulation. They are already working since the 1st of August this year, 2080. You already heard about that, I think so. Here on the right side you can see some slides. What does it mean for the margin you need to have here for open a position, maybe for example here the DAX or Euro or USD dollar. And so for more details you can check also our website about this, and for sure you can call us here or are asking our customer support what are your options. Maybe you are able to enter the professional client status or something else. Later more about this topic here. Yeah, here is a picture for me. My name is Tim Temp. I'm account manager from Berlin. And we have the pleasure here today. And in a couple of moments, the trader of today will join us. Here you see the picture from the traders, 5 days with 5 different traders and 5 different trading styles. But today, unfortunately, Giancarlo, he is normally here on Wednesdays, but he is sick. And we have the pleasure here today with Jens Klatt. He will join us in a couple of moments. He's also a very famous trader from Germany. And he will show us what's going on in the markets today. Here we have a quick overview why Admiral Markets. For example, here our bestseller, the DAX 30, we offer with a typical fixed spread of only 0.8 points during the main trading hours. These and other products you can also trade in mini contracts. Yeah, on the right side you see some of our awards for our customer service and our products. For more details, for sure, you can contact our customer service. Here you have also a quick overview, one word global offers, which I mean at the beginning. Here maybe you have another option for the regulation stuff. We are around the global, and we have a lot of license there, and in every region of our world we have sometimes different regulation rules there. So maybe there are another option for you. If you maybe would like to know about this more, you can contact us for sure, our customer service as well. So that's me for the moment, for the introduction. I say good morning to you, Jens. Hope you're doing well, and you can start with your view of the markets.
Yes, good morning. Also from my end here. Thank you for the nice introduction, Tim. So first of all, let me share my screen. There we go. So same slide. Yes, I'm really happy to be here and to present you some thoughts on the markets. So the thing is that I'm really happy to have the chance to replace Giancarlo today after the DAX made new yearly lows than yesterday. And there was a very interesting reaction, in fact. So let me just share my screen here. So this is the DAX on a daily time frame. And by the way, just here the trade was triggered in EURJPY. There we go. So interesting push. First of all, let's probably first start with the setup. I'm a little not irritated, but that's very interesting to see that here now that the setup was triggered just a few seconds ago, and now let's put it that way. It wasn't expected to happen after the market presented itself quite volatile, unspectacular. So let me just probably here bring in the setup. That's the setup I already prepared, and which was, by the way, entered already here. Yeah, at 11. In fact, 11 Estonian time, so it's 10 a.m. German time then, and it's a setup, long setup based on the so-called Asian range. It's by the way, I have to bring the Asian range here into play too. So it's a 128.34 to 128.79. So this is the Asian range, and based on that, we formulated the setup. With a breakout here on the upside, we go long. Once the market makes new highs, then that was just triggered here a few seconds ago. While the stop is placed in at the low of the range, it's 128.34. The question is why the long side? That has to do with this purple line. So you can see it here. This is the exponential moving average 11 in this case, and there's a very simple rule. It says if we're trading above this purple line, we only go long. If we trade below, we go short, or we only go for long setups, and we only go for short setups once we trade below that. But in this case, it was the long side that has, where the breakout occurred then here above 128.79. And so the target now is placed at 129.55 with a potential reward then here of 76 pips then in this case. And it's a purely technical setup. So it's not based on anything related to targets based on a chart analysis or something like that. It's 100% technical and statistically proven over a very, very long time span. Works out really nice. The let me just, well, isn't here. Let me just give you an idea of the hit rate. This is around 48% for this approach, again, for a very long time span. So we're talking about nearly 10 years. And the so-called payoff, this is the ratio of the average gain to the average loss, is around 1.4 to 1. And now, based on that, you can already calculate quite easily and quick the so-called expected value, which is then 48%. You have to multiply that with 1.4, and then you subtract 5.2 here, multiplied with 1, and then you will see, let me just calculate that, that's 67. So it's 67 minus 5.2, it's 15 here. This is bigger zero, so it has a positive expected value for a very, very long time span. And so the setup itself, it's proven profitable, even though, sure, we do not know whether it will play out then today or not. Hopefully it will, even though I have to say chances are probably reduced a little. And it has to do with the fact that the current market conditions in this setup, or the current market conditions, put it that way, the current market conditions do not necessarily fit this setup really well. So it's, yeah, true, in fact, for many setups here, also for such breakout setups, you need trending market conditions, and you need clear structures which follow, in this case, then after the breakout, an identifiable pattern. And the thing here is that if you now, and this is the EURJPY on an hourly time frame, if you now look at this structure going back for nearly 1.5 to 2 weeks, you can see that the overall mode here in EURJPY is choppy sideways, let's say. So it's definitely not favorable market conditions for this approach, even though the thing is that we keep on trading this setup, because these market conditions happen from time to time, and still the approach hasn't been unprofitable due to them, or due to those market conditions. And with this in mind, we only, or the only chance we have is to probably reduce the position size here. And probably, especially today, when trading the setup, why you might ask now, why shall we reduce the position size? Has to do with the fact that we are currently about to enter a very interesting period of the year, is probably a wrong way to put it, but period of the week, let's say. So you might have seen in the MetaTrader that yesterday there was an announcement, there was a news which came across the ticker here from Admiral Markets. It's the trading hour schedule for Thanksgiving. And let me just enlarge this a little. There we go. So what you can see is that there are different trading hours. Now, tomorrow with Thanksgiving, the DAX in this case, our main asset here in Germany, in fact, is not affected, but the S&P, the Dow Jones, those two markets are affected. They have reduced, no, what's the word for this? Reduced trading hours, or they are not trading as long as usually. So usually market closes at 10 p.m. German time in this case, so CET. And tomorrow it closes already 2 hours earlier. The same is true for Friday, which is also Black Friday. And both days should be expected to have a significant drop in volume. And volatility will be really, really low. And with this in mind, it has also not only an effect on the equity markets, but also on the treasury markets and also on the commodities / metals and also FX markets. And yeah, with this in mind, chances are reduced that today there will be a significant breakthrough here on the upside, even though again, we have to trade the setup probably with the reduced position size, and let's put it up. I just hope that it plays out or not. But consistency in trading and discipline in terms of trading the approach is necessary for long-term profitability. That's the reason why we have to go with this setup today, even though again probably with a reduced position size. So that's it around the setup here. Now let's go to the DAX and now have a look at what happened yesterday. So by the way, you might be surprised that I'm not looking now at the market or something. In fact, I have where my job is done here. So what I can say is, okay, I have a clear setup. I know that this setup has played out really well in the past. It's a profitable approach. I'm trading the breakout here on the upside, respectively on the downside, depending on where I identify the advantage. I have my stop level. I entered it into the market. I have the take profit level on the upside, on the downside, depending on if I'm long or short, and I just go with the trade. And that means that I'm in this trade here as long as this as the take profit level is reached, respectively, the stop loss level is reached. If, by the way, that's something probably we also should enter right here already. If neither the take profit nor the stop loss level is reached before 9:50 p.m. German time, then I take out the trade wherever it might trade. So hopefully it will trade somewhere here in this region, because then the trade would show a profit, even though it hasn't reached the take profit level. While on the other hand, I take out the trade, even if it's trading then within this range and showing a small loss in this case, even though it's not 1 hour we are losing here. And this is something we can place here already, by the way, with this line. We can make it a so-called smart line. Let me just see. Today it's the 21st, so probably it makes sense to have a 5-minute chart. One sec. So I just oh, that's not so cool. 1 second. Let me do it that way. So we have now to go here. It's click this line, and now we do it that way. We click Alt on our keyboard, and then we click here with the left mouse on this line, and then this window appears here. It's regarding the smart lines, and we can here say we close the order. So it's German, but the Schließung is German. It's close in English. So we have this order number here. It's EURJPY. You can see it here, and then we close this 100%, and then it turns yellow. And this now means that once this line is hit, and if we are not running into the stop, respectively into our take profit before this line is reached, then the trade is automatically is automatically closed then in this case. So we, if you want, we somehow semi-automated our trading here. That's a great feature which the Supreme Edition here from Admiral Markets offers. You can download it for free for MT4 and also the MT5 on the website from Admiral Markets. Yeah, and in fact, that's it around the EURJPY. So nothing to add here. So the only thing we can now do is hope that the market will move in our direction and hopefully take on momentum. If it doesn't take on momentum, well, it reaches the stop loss, or it is then taken out automatically here at 21:50 p.m. in the evening then, German time. So now let's come back to the DAX here. So the DAX has seen new yearly lows yesterday, even though we didn't take on further momentum, and that was something. Somehow it looks a little promising, let's say. So what do you mean by that? Well, we are now entering again a very interesting window of the week, respectively, of probably also of the year, because around Thanksgiving usually do not have such a high volatility in the markets, or it's reduced volatility due to the trading hours, due to reduced volume in the markets. And with this in mind, chances are high that the market will not really take on further momentum on the downside, and plus on top of that, volatility picking up steam on the upside then. And so with this in mind, chances are very good that we have seen the weekly lows already. And there was already a reaction yesterday here against this region, as you can see here. So we didn't push significantly lower in the afternoon then after US equity markets closed, but we were capable of making it back above 11,100 points. And that was the first sign that probably we have seen the weekly lows here. And with this in mind, chances are good that probably the DAX will see another attempt, not necessarily today, probably tomorrow, probably on Friday, and with reduced volatility and not big swings to be expected. Nevertheless, some drift here on the upside, which pushes us back above 11,200 points, probably up to 11,250, 11,300 points here. And all this due to Thanksgiving here and the fact that we shouldn't expect markets to swing aggressively in one or the other direction. And that's also true when looking then at the S&P, for example. So yesterday we fell below the yearly open. So for the year in the S&P 500, we are now negative. The same is true for the Dow Jones also. This is all in all a somehow bearish sign, even though, and therefore let's switch over to, well, first of all, the economic calendar here from Admiral Markets. You can check it out by clicking on admiralmarkets.com and then going via analytics to the Forex calendar. There you can see another reason why we shouldn't expect too much volatility to happen. That has to do with the thin economic calendar, even though here there's some interesting events today at 1:30, in this case London time, durable goods, but also existing home sales, for example. But it shouldn't be expected, it's not really market moving. Let's put it that way. Not only because of Thanksgiving, but also because the monetary policy path from the Fed is already leveled. And so in terms of the next rate hike then at the 19th of December in this case, and that in mind, these events are not really capable of heavily moving the markets, not today, but also tomorrow and also on Friday then. But what I wanted to show you is the fear and greed index in this case. So the question, what emotion is driving the market now? And so some might say, okay, yeah, it's a sentiment indicator. Does it really add so much value to my trading? I think so. So some of you might be surprised a little after the bearish action, in this case in the DAX, but also in the S&P Dow Jones, that I'm more willing to take long positions, long engagements, instead of short ones. And one of the reasons for that is, again, Thanksgiving, low volatility, but also this potential sentiment extreme we can face here in the fear and greed index, for example. So currently we are in an environment which we can consider to be an extreme fear market environment. Now, the interesting thing about this is that in the past, such extreme events have acted as contrarian signals. What do I mean by that? Therefore, we shall remember an article which was published around 1 month ago. That was after the S&P saw its first aggressive push on the downside. And it was published also in the Admiral Markets traders blog section in this case. So this is the top below the Forex calendar. And there I presented this chart. It's not mine, but it's from Ryan Detrick. I used it here from Twitter. He published it there. And it was it's a really great idea. Where it's a great way to get an idea of why is the current sentiment interesting for equity markets from a contrarian perspective. So it's not only Thanksgiving, but also the end of the year, which is approaching. We are approaching here. So it's Christmas. The economic calendar is thinning out, and all in all, we shouldn't expect big volatility to happen. In fact, we are now in a market environment where many market participants already start to talk about the so-called Santa Claus rally, for example, or year-end rally. It will be difficult this year if it will be such a strong move on the upside, even though all in all, the potential on the downside seems diminished. And in combination with the sentiment here, you can see that last times we've seen this extreme fear environment, which can be seen here in this oscillator. What you can see is that now, when we enter this extreme fear territory, the market has shortly after bottomed out and then pushed higher from there. I mean, market conditions were completely different at the beginning of 2016. Probably there were also, to some extent, a little different here at the beginning of 2018. But all in all, we can say that from the sentiment perspective, the risk reward for short engagements in equities seems to be not so attractive, let's say. So chances are higher, I think, that we are about to see a short-term bottom and at least see a short bounce higher, which will then also potentially mean higher prices in the DAX then in this case, even though we have to say that from a technical perspective, when looking here at the daily chart, everything below this last relative high here, 11,670, 11,700 points, should be considered bearish. So everything below that is only a so-called regressive move, even though, again, if I'm trading short-term and more an intraday trader, then I'd be really, really, really careful here in regards to short engagements. So finally, there's also something I'd like to present here. It's on Australian dollar against the US dollar. And in this context, I don't want to say that much, but in fact, want to invite you to visit the website from Admiral Markets. And here, then click on the button Traders Block. And if you click on that, you will see an article here in the morning. It appeared there. It's around the Australian dollar against the US dollar. So everything I presented here around equities and potential bottom forming is also interesting for so-called high yield currencies, as the Australian dollar is one. Because you can also show, and that's something probably we can then present in the future. It will be around, December 10th to 15th of December. So shortly, one and a half, 2 weeks before Christmas. It can be shown that, or you can see that then, if checking out statistics here for a long time period, that the Australian dollar, but also the New Zealand dollar, for example, that those currencies, those high yield currencies, enter a seasonal bullish pattern here. And overall, the Australian dollar has seen some significant pushes lower. But now the question, I think, which comes to mind is, are we about to probably find a bottom before breaking back below 71.50? If yes, and we can somehow start to stabilize here, I think chances are very good that we'll see another approach to break back above 73.30. And if we make this, further gains are likely then to push us higher up to 74.30, respectively 74.50 here. So the region around those June, July highs around, which we can then probably quite quickly approach, especially if there's pressure on the US dollar. If the pressure continues, probably based on a drop in US yields here. And before I end, I want to answer the question here in the chat box from Miguel. It's on what's your opinion on GBPUSD? I have to say, due to this this Brexit discussions, let's call them, and everything what happened there, especially over the last week with all the resignations coming in after Theresa May presented her Brexit deal in the Parliament, and her cabinet really falling apart. It shows that the situation is, let's say, very tense, and especially now with also the European Union putting a lot of pressure on the UK, if you want. So in fact, on the 25th of November, there's a summit. There was already planned a summit, and Donald Tusk last week said, well, really, we do not care whether they have a Brexit deal or there will be a Brexit deal or not. We have this summit there, which puts a lot of pressure on Theresa May, because we can be sure that there's no deal reached. Or a deal which the Parliament, the British Parliament, agrees on before the summit takes place next Sunday. So with this in mind, I think chances are high that, or probably market participants start to really speculate around a no deal scenario, which is extremely bearish for pound sterling. And in this context, I think you can perfectly see what my take on pound sterling is, in fact. So it's very hard for me to see pound sterling being, or I don't want to be long pound sterling against 160, 126.70, 127 here against this region. But in fact, it's more that I expect a push lower to happen here. That's also something, by the way, and further details. I don't want to, or I don't have the time, let's put it that way. I don't have the time to go into too much details here. But in the traders block on the website from Admiral, you can also scroll down a little, and then you'll see that there is a headline from Monday. Will the Brexit mess push GBPUSD down to and below 120? So my thoughts and deeper thoughts around this, you can also find it here in a written form in the traders block and on the website from Admiral. And yeah, so that's it from my end. I think Tim probably wants to take over again.
Okay, Jens, yeah, thanks a lot for your interesting introduction here for today and showing us your view on the markets. And for sure, here we have some setups that's very nice, in my opinion. So, yeah, dear listeners, thank you for joining us today here. We are back tomorrow at the same time here, if you like. And also, we have a lot of webinars in the German language if you are able to, listen to that. Yeah, thanks again, Jens. And maybe some last words from you, if you like. For me, that's it for the moment. I wish you all a good day, nice trades, and we see you very soon. Bye-bye.
Yeah, in fact, it's only 2 words. It's happy trading. So see you soon. I look forward to it. Have a good day, and bye-bye.